Hello, everyone. Welcome to the last live session of the week, and it's been quite a week this week for all sorts of markets, actually. So we'll take a look at that in a second. Let me just put the risk warning up before we get started. So if you're new to these, we do these 3 days a week. We didn't do it on Wednesday because I was stuck on a train, but we do it Monday, Wednesday, Friday normally, and it's a quick 20-minute catch up really with what's been going on with the major markets. We'll look at the euro, the pound, a couple of stock market indices, oil and gold. Also from next week we're going to do these 5 days a week. I think they've proved to be quite popular, and I think they're interesting things to do halfway through the day just to catch up what's been going on and levels to look at. So next week it'll be 5 days a week, and that'll carry on for the foreseeable future as long as they remain popular. So to never miss out, if you're watching this now on YouTube, if you just click that subscribe button, you get a push from YouTube whenever it goes live. And if you've got our app, our trading app, you get a push from that as well. Okay, so I think that risk warning has been up for long enough. So let's just drag the trading platform over. There we go. Before I get into that, a quick commercial for one of our sister companies. We launched Currency.com this week. It's a tokenized securities exchange. I'm not the best person to explain what that is. If you go to our website, Currency.com, there's a video on there. But for those of you who are fans of crypto, it's a way of trading other markets using your cryptocurrencies without having to cash out your cryptocurrencies. So it's the launch stage now, so you can sign up and go on a waiting list, and it's proved to be pretty popular. So take a look at that. Right, let's get into the normal markets. Where do you start this week? I mean, we came into this week, of course, with the Brexit vote. The Brexit vote, which we all expected the government to lose, but nobody quite expected it to lose by quite the margin that they did. Then we had the vote of no confidence in Theresa May, which she passed, and we're at the end of the week and we are no clearer on what's going to happen with Brexit. So of course what we've seen this week, we'll start off with the pound. Massive volatility. You know, if let's just have a look at a 5-minute chart. So when we were looking at this, when was it? Was it Monday night? I can't even remember now. When the vote was, no, it would have been, was it Tuesday? So the market was selling off all the way into the vote. So this is pound US dollar. So we came into the week trading around about 129, selling off all day on the day of the vote. And I think I did mention on Monday, this 127 level was a big one. Let's just flip it out to the hourlies first, then we'll go back to that. So 127, the 4th of Jan, the 8th of Jan, and again on the 11th of Jan had been a big level. It did have a little look below it, but then it went like an absolute rocket when the results of that vote came out. So the lowest trade was about 126.70, and that would have been 7:30 on the 15th of Jan, and then went rocketing away back up to 128.80, 129. And we are now, yesterday, pound against the dollar, let's just drag this back out, traded up to 130. It's the best level we've seen for a couple of months. And I think I've been saying for maybe a couple of weeks now, and I put a video out on the channel on Monday saying that I do think the pound is potentially going to continue to confound people who are expecting it to collapse because of Brexit in 2 months. All of the bad news is out there. We know what the worst case is, and the worst case is, at the moment at least, that we come out of the EU with no deal. So anything that looks better than that is going to lift the pound. If they end up extending Article 50, if we end up with the potential of a second referendum, if at the extreme, Brexit doesn't happen, all of this is good for the pound. So I think for now, and for the year so far, we're still in this recovery mode for the pound, where the market's still going up. So it's a really interesting market. This is what it looks like on the daily chart. You could argue, if I pick up on just that trend from from 143 pound US dollar in April last year, after we saw that resurgence for the US dollar into the summer. We've also broken out of that downtrend. So I do think that it could well be the surprising market this year. This pound recovery, famous last words. Let's see what happens. There are plenty of hurdles along the way. We've got the early November highs around about just ahead of 132, and the market has come quite a way this year. We've moved from 124 to 130, so we've seen a 600-point rise off the lows so far, and we're only really halfway through January. So we have seen a big move. It is looking a bit overextended, pound US dollar. If you look at the RSI there, we're at an extreme. The last time we were this extreme was in September. It did prove to be the top. So it's definitely a market that could do some cooling off, but I still think it looks like a market where the people are willing to step in and buy the dips. Really interesting market. So if you have any questions while I'm going through this, just put some of the questions into the YouTube channel. And it's maybe an interesting one going into this afternoon. We had UK retail numbers out this morning. Retail sales in December were slightly lower than forecast. They dropped 0.8%, I think. And there's a feeling that Black Friday had hoovered up a load of sales. But if you were aggressive, there's arguably a trade to be done here. We've seen the market slide from last night near enough 130. This morning, ahead of those retail sales numbers, the market dropped to 129.25. We've been up to 129.60. We're back down, and those lows have held. So I think, and I'm a big fan, if you've attended these things before, of just looking at the simple stuff. Looking at previous big levels. For me, I'd rather have a stop loss below yesterday's low, but yesterday's low, because of the rise we saw yesterday. Yesterday's low is all the way back here, 128.30. It's 100 points below where we are now. So arguably, it's going to be an interesting one to watch this afternoon to see what sort of an end to the week we have. But there's arguably, if you wanted to have a little punt on it, 129.30 is the closest I have my stop. Well, let's do that. There's always new people and clients on these sessions, so let's just do it. Let's do a trade on pound US dollar. And I'll talk through really just why, clearly there are lots of trading platforms out there, but with us, you can trade relatively tiny. I can trade just 1,000 if I want to. So let's just set that up. So I said that 129.30 was the low. Let's say we're going to put our stop at 129.10. There we go. So I don't want that one. I just want to close at a loss. So if I bought 1,000 at 129.41, where it's trading now, with a stop at 129.10, my risk is just over a couple of quid. So I think, with us, if you've never traded before, I'm a big fan of trading with real money, but starting small, and it's one way to do it. Let's bump that. What should we bump that risk up to? Let's bump that risk up to, let's say we want to risk 30 quid or something on this trades. So if I close that at a loss, so we're going to do about 10 times. We'll do 10,000 on pound US dollar, just buying it off that support. We'll put our stop at 129.10. So our risk is, hang on, 129. Sorry, I'm clicking too many things. I've got that Friday feeling. So my risk is 21 quid. So if we buy that, and there we go, the trade's in. So we're really just looking to see if those lows from earlier this morning hold, those 129.20 lows. Let's see what happens, see if the market sells off or if we do get a bounce from here. But pound US dollar, really interesting because of all the Brexit stuff. Who knows what's going to happen next with Brexit, but for now, the pound, it does feel as if it's discounted the absolute worst case scenario. So it wouldn't surprise me if we saw further gains, but there are some hurdles up ahead, 130.75, 132. These sort of levels. Let's see what happens in the short to medium term. If we did get a sell-off back towards 126, I still think it looks like a buying opportunity, pound US dollar. So an interesting week and an interesting market to continue to follow. Let's take a look at euro dollar. Euro dollar has been a strange one this week. It's been fairly quiet last couple of days, but you could argue that the recovery that's been in place since November for euro dollar is still going. Let's just pick up on that. So again, this is another one that maybe coming into next week, we'll see a bit of strength in euro dollar. So we had these lows for the euro US dollar in November, where it traded down to 112. It's recovered recently, just a week yesterday, it recovered as high as 115.70. We've lost about 150 points or so this week, but you can see, hopefully you can see that, that's clear on your screens. We've sold off back towards this trend line, and we're seeing, at least today, a little bit of strength coming in. So I think that's an interesting one for the rest of today and coming into next week. Do we see the euro get a bit of a lift? Let's just flip this over to an hourly chart, and we can see, we can see it in a bit more short-term detail. So I think that's an interesting one coming into next week. Let's see what it looks like on Monday. But for me, the big support on the euro, short-term support, is at 113. So it's about 100 points away from where we are now. It's had a bit of a sell-off, but that 2-month recovery in euro US dollar is still very much intact. So let's see what next week brings for that. Now, let's take a look at stock markets. It's been, again, with this massive move last night. If we bring up the S&P or the Dow, and I must admit, I wasn't following it that closely, but I saw on Twitter, it was this move here, and it was apparently on fake news. I think there was a rumor. So the Dow at 7:30 last night was at 24,200. And by 10 to 8, it had traded at 24,470. So we saw, what's that, a 270-point move on the Dow in about 15 minutes last night. And I think it was news on easing of trade tariffs between the US and China. And clearly, this has been a concern, for markets. It dogged stock markets in the last half of last year. So we did see this surge, but it ended up, I think, not being true. So we did see markets give up those gains, but look what's been going on. Let me just zoom this out. So there's the sell-off when everyone says, well, actually, this isn't that true. Markets closed, US markets closed around about here last night, but in the overnight session, they're pushing higher again. So we're at fresh highs for the year. Let's flip this out to a daily chart. Here we go. So we had that terrible December for stock markets, and then this year we've done a complete handbrake turn on that, and the markets have recovered, and we're looking at a strong start going into the official sort of 2:30 start for US markets. So it's really interesting, really, really strong moves. This recovery, I'm really surprised by how strongly markets have recovered this year after the pasting that they took in the second quarter, or the last quarter, sorry, of last year. But if we stick with the Dow, we've got our recovery trend chugging away. Actually, if we took it off the lows, there we go, chugging away, something like that. So at the moment, in stock markets, for short-term traders, any weakness, I think, still looks like a buying opportunity. And obvious levels to watch are really the lows from the previous days, because we get such relatively big moves. If it does sell off and it starts getting near the previous day's low, there's almost that fear of missing out amongst traders at the moment. They're only happy to jump on and buy it at yesterday's lowest prices. So going into this afternoon, the Dow closed last night. The official close was 24,360. We're currently about 130 points above that. So if we saw some weakness later on today, look at the lows from yesterday, and the low from yesterday is around about 24,100. But stock markets have had a cracking January so far, and in this overnight market, as we can see for the US market, the Dow here still expecting it to start strong. Similar for the S&P, of course. The Nasdaq's an interesting one. I mean, the tech stocks took quite a beating in the second half of last year, and I thought the Nasdaq was interesting because, again, the Nasdaq in the first 6 months outperformed I think broader stock markets. But if we look at what happened really since September, let's just pick up on this. Let's pick up on I'll try and looking something like that. Looking at where the Nasdaq 100, this is the Nasdaq 100, is going into this afternoon. We're right on that trend line that's been in place October, November, December, 3.5 months now. So it's going to be really interesting. I think the levels to watch. Let's pick up on these old highs and back here. 6,900. So the Nasdaq's currently trading at 67.40. with just under 2 hours until the market officially opens. And if we see a move through 6,900, it looks like that downtrend is well and truly over. So it's going to be an interesting finish to the week and an interesting start to next week. If you thought the stock markets were still doomed, we're back to the place now where it looks like prime selling territory. So I think that the next few days could be quite instructive as to what's gonna, what maybe the next few weeks could hold for stock markets. Looking at the indicators, we're not really overbought on the Nasdaq just yet. We're nearly there though. It's trading about 70% on the RSI. It didn't go overbought last time the market rolled over in early December. The last time it was truly overbought was back up here at the highs in August. But it's going to be really interesting. But for now, these markets are still strong. We've seen gains. It's a quiet middle of the week, but really surging again yesterday and looking strong going into this afternoon. If we have a look at European markets, I've had a trade on the DAX for a week. This is a good example why I think it's difficult to be patient, but sitting on your hands and just trying to wait for things to play out, is a sensible thing to do. So I bought it. I think it must have been last Friday, so the 11th. So in here somewhere, I don't know, 10,850 with a stop loss under 10,780. So I had an 80-point stop loss, something like that. And of course, the market's just gone sideways, 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 sideways. I've been in profit, I've been in loss, I've been in profit, I've been in loss. And because of the strength in US markets, it's finally got a move on. It's broken a big level, the DAX today. 11,000 has really held this market down since the middle of December. So you can see that the peak there, December the 13th, near enough 11,000, came up to it 9th of Jan, came up to it again the 10th of Jan, again the 15th, and then finally today it's breaking 11,000. This is quite a major move on the DAX, and it's not surprising with these US markets, US stock market still strong. It's dragging the European markets up with it. But if we flip this over to a daily, it doesn't really change for now, at least, the bigger picture for the DAX, which looks maybe something like this, with the trend coming off the highs from June. So at the moment, looking at the DAX, German market in isolation, this doesn't look that different just yet to the swings against that trend we've seen, but it is still strong. Like these US markets, it's still strong, and the obvious next hurdle maybe 11,500, and it still looks like a market where we should be buying the dips from a short-term point of view, at least, because the momentum over the last couple of weeks has been up. The last stop, just keep those questions coming in as well, and I will I'll answer them when I've been through all these normal markets that we normally do. What was I going to look at next? FTSE. We'll look at the FTSE, then we'll have a look at the price of gold and oil. FTSE looks pretty similar to the DAX in a way. It's been selling off. It's been in this downtrend really since August of last year, but not surprising with the strength we've seen in recent weeks. We've seen this market pull higher, but the strength of sterling is holding the FTSE back a bit. And we talk about this all the time whenever we see a decent move in the FTSE, because so many FTSE 100 companies derive their earnings overseas. A strong pound affects their share price and will affect their profits. A weak pound normally will help lift the FTSE. So we're seeing the FTSE being held back a little bit, but again, it's having another look at that near that 7,000 area. Yeah, but I think US stock markets are the ones to watch, because at the moment, as usual, the rest of the world is just following what's going on in the US, and these markets are really strong. So let's see where we end today. At the moment, we look set for a strong start, and then on Monday we'll come back to it all and see what the week ahead looks at and the big levels to watch. Right, let's take a look at the price of gold and oil. Gold has sold off a bit today, so it's been a little bit boring the last couple of weeks. For me, though, it doesn't change that bigger picture of the recovery off the August lows for gold. So we've gone from 1160. It's been banging its head up at 1,300 for the best part of 2 weeks now. The price of gold, it's sold off a bit today. Let's flip it over to a short-term chart. That's what today looks like. I mean, arguably, it's an aggressive buy if you think, well, actually, it's overshot the previous support at 1285. If you thought it was going to push its way back into the range, there's an argument for being a buyer at 1285 with a stop under the low for the day. somewhere below 1283. So it's got clobbered a bit, but we've got lots of support. 1280, bigger support, lows for the year 1275. So for me, I think in the next couple of weeks we'll see gold have another go at that 1300 level, and I think that's the one it needs to break to try and kick off the next sort of leg higher, that sort of thing. But a bit of a dull couple of weeks for gold, but that recovery from those lows is still going on. And finally, before we get to the questions, crude oil. Let's if we have a look at what are we looking at? US crude oil. Here we go. So it continues to look as if it's turning around this massive slide we had from $77 a barrel in October to sort of 42, 43 in December. We're trading at just below $53 a barrel. Now, there was a really interesting move yesterday in oil. We'll have a look at it in a second. So sticking with the daily chart for a bit, that it is looking a bit overheated up here. It would be interesting if it had a deeper sell-off from here. MACD's looking a bit extreme, not giving a sell signal yet though, but still pretty strong. And I think the obvious next hurdle, I think it's these highs before it went crashing below 50. So around about, let's say $55 a barrel is the big one to watch on oil. But for me, if it sells off, let's say it sells off sharply beginning of next week, that's when it starts to get interesting. Where do the buyers come back in? If it's a valid turnaround that we're seeing now, we don't want to see these old lows taken out, but it's still strong. But the move yesterday was an interesting one because what it did, I'm a big fan of looking at previous highs and previous lows. So yesterday was Thursday. This was the low from Wednesday. Let's just pick up on that. And I think this is, like all these things, it doesn't work all the time, but it's an interesting, aggressive trading approach. So the low from Wednesday was at $51.50. This is a 5-minute chart we're looking at. It pushed through yesterday afternoon, about 12 o'clock, traded as low as 51.30, but then it rallied at a big rally, sort of 70, 80 cent rally, came back again, and it holds and then starts pushing higher again. So again, an aggressive trade, if we just think that's a false break, and I think we have covered false breaks on the YouTube channel. There is a bit on trading strategies and they're looking at false breaks. If we want to be a buyer, say we're a buyer at 51.80, put a stop loss under the low. We've got a stop loss of 51.20, 60, 70 points away, and the market's moved about 150 points higher so far. It's interesting. It's really turned around, broken through yesterday's high, broken through Wednesday's high. So oil at the moment is set for a relatively strong finish for the week. But I think where it gets interesting next week, if it does sell off a bit deeper, and we see the buyers come back in. I'll have a look at the questions now, and then we'll do that. So how's that trade doing? I think it's in profit. So we bought at 129.36, and the market's 129.40. So we made £3. I can buy myself a sandwich at lunchtime. If you're going to leave now, just to remind you to find out more about the company, just go to our website, Capital.com, and you can find out a bit more. You can open an account, open a demo account, open an account with real money, all that sort of stuff. If you have any questions, drop me an email. My email address is david.jones@capital.com. But let's just go back to the trading platform and just answer any questions that have come through. Natural gas, let's have a look at that. So natural gas, we've looked at this quite regularly now, haven't we? Because we looked at it on Monday, I think, and we had that break, didn't we? That break and the gap on Monday. So we did see a bit of strength Monday, Tuesday. It's filling that gap. I suppose, personally, we had that parabolic crazy move in November. It's gone almost back into the previous range. We've had a bit of sideways in January, and it looks to have broken out of that downtrend. So I would suggest that for me, that maybe the trade here is, and I said before, I've never traded it, and I don't think I will. But the trade here, if you thought there was going to be a massive upswing in natural gas, then it shouldn't take out these lows from earlier in January, around about, 282. But maybe you'll want to wait to see if we see a bit more pressure next week and the buyers come back in, because it's had a bit of a move after that gap. It looks like it's trying to fill that gap now. Let's see what happens for the rest of the day. Let's come back to it on Monday if anyone's interested in it. But for now, if we are going to see a recovery, maybe back above 4, we don't want to see these lows taken out at 2.8. but it is still pretty weak. So let's see. Let's come back to it on Monday and see what it's doing. Any reason why there isn't a sterling euro? Oh, don't we quote sterling euro? GBP. No, we quote euro sterling. So it's the same thing, but on its head, euro sterling. So that's the way around we quote it, which is the market way of quoting it. So gold, I think we covered gold. Someone's asking about gold, silver, and lithium. I've never looked at lithium, but let's have a look at the price of silver, because we don't look at that. There's our daily chart. I mean, I suppose it is similar to gold. You know, we had the lows. I mean, it made its lows later. You know, we did have the lows in November for silver. So for me, again, if we saw a deeper sell-off for here in the price of silver, then maybe it starts to get interesting. You know, because you could say, well, hang on, you know, we've got this recovery going on from the November lows. You know, if it starts to trade maybe down towards 15, then maybe it looks interesting. You know, I think these precious metals haven't been that interesting in January because stock markets have bounced back so much. You know, traditionally, you know, particularly gold, clearly market uncertainty lifts the gold price because we've had such a strong performance from stock markets in January. The appeal of gold and probably silver has waned. So where it gets interesting, if stock markets get really choppy again, do we see these come back? But for now, I think that recovery is still intact, but maybe it needs to sell off a little bit more, and then it gets a bit more interesting. Are you trading for the long term? I do. I've got longer term. I've got some long term stuff on gold and the pound for this year, and then I do short term stuff as well over a few days. So I think, again, this isn't financial advice. You know, I think we could see US dollar weakness this year, which will lift gold and the pound. I think stock markets could be in for some more volatility, even though they've started this year strong, and that would be good for gold. And I think the effect of Brexit has been overstated for the pound. That's what I think. So I think we could see a pound bounce back. So that's sort of longer term stuff, but I do short term stuff day to day. Is it possible to contextualize current blockchain investment assets within wider global stock market asset class or specific sector dynamics? I'm not sure I understand that question because I'm not the brightest person when it comes to blockchain. I think, I look at Bitcoin is the one I look at now and again, and I think I don't know what the impact the blockchain and cryptocurrencies is going to have in the future, but I do know we had a massive bubble end of last year, beginning of this, and these markets are still massively suffering from that bubble. So I've got very little interest in trading Bitcoin, to be honest, because I think there's a lot of damage has been done to sentiment in that market this year. You know, whether that means the future is going to be different and we are going to see a massive upswing, but for me, they sit outside the normal asset classes at the moment because of what they've been through over the last sort of 15, 18 months or so with that massive boom and then the bust. So I tend not to class them in the same way, but that's just me. Someone's saying, can we have a look at platinum? Do we cover platinum? I don't know if we cover platinum. There we do. There we go. Platinum, there you go. There's the spot price. They're all looking the same. If you look at like gold and silver, it's a similar sort of story, isn't it? We had massive rally for the US dollar, or a massive recovery for the US dollar from April last year, and that hit clearly the euro and the pound, but also gold, silver, and it looks like in this case, platinum. And again, like gold and silver, we have seen them making a base. So I think that there's an argument that it looks like we could see recoveries in 2019. It's just, where do you put your stop? If I was a buyer of platinum now at 808, I would want my stop probably under these lows from August at 755. So that's only 7% away, isn't it, from where it's trading now? So if I was an investor, that I might be happy with that. But for me, gold is the one I'm in. But they're making similar sort of shapes, aren't they? And palladium. Let's have a look at that. Palladium spot. Here we go. Wow, that's completely doing its own thing, isn't it? What you should have done with palladium is bought it in August last year. That's my Harry hindsight advice. That is an incredible move. I never look at these markets, so I don't unfortunately know why it's moved so strongly, but that is a heck of a move in palladium. And again, it's the classic stuff, isn't it? We have the trend that's been going up. We want to buy into the trend. The market goes sideways for a bit, breakout, off we go, sideways for a bit, breakout, and off we go. And just incredibly strong palladium. It's a really interesting market. Maybe we should start paying more attention to that one in the future, maybe, because that is a heck of a move. I don't know how much data we've got on palladium. Wow, look at that. So that has to be all-time highs, I presume, isn't it, on the price of palladium? So the highs in 2001 were 1084, and then the move through those in October last year, and it's just carried on going. Impressive. That's the most exciting chart I've seen since Bitcoin about a year ago. So we'll keep an eye on palladium. We might cover that again next week and see how it's doing. But clearly the trend's really strong. I think the only problem with runaway markets like this is where do you put your stop loss? Where I mean, what do you do? I suppose you could, if you think it's going to carry on moving like almost exponentially, you just buy in and you whack your stop loss under the low of the day before or under the low of the last couple of days. I do have a problem sort of trying to catch these runaway markets, but that's a really interesting one. We'll come back to that over the next few weeks. And actually, let's take a look at Netflix. We'll start wrapping things up, but let's take a look at Netflix because they had earnings out last night. Netflix, I think after they came out after US markets closed, and I think their share price was trading down a bit in the after hours market. I think it was down about 3%. But I think I saw on Twitter, I think I retweeted it, that their share price is up 44% in the last 3 weeks, the last 3 trading weeks, Netflix. So it got really badly beaten last year, peaked at $420 a share in June, and it lost almost $200 by December. And then since December, it's rallied by about $120. So Netflix might be interesting this afternoon. It was a bit weaker after their results came out. Clearly, it's been incredibly strong since the Christmas lows. Let's see what happens this afternoon. But I think some levels to watch on Netflix. If we flip this over to an hourly chart, so if it lost 3% in the overnight market, then it's only about $10, isn't it? So I'd see how it performs around about the 340, 346 area. But there has been plenty of support for Netflix on the way up. Let's see what happens this afternoon, but it wouldn't surprise me if it dipped initially and we saw the buyers come back in. Okay, that's it. I think we've covered quite a lot there. I've learned something new, that I should have bought palladium about 8 months ago. I've learned that. We'll do this all again on Monday at 12:30. And like I say, from next week, we're going to do these 5 days a week, I think, just a quick 20-minute look every day at what's been going on. But markets to watch going into this afternoon, stock markets, because we're expecting a strong start this afternoon for US markets. The pound, because it has had a good week and all the Brexit nonsense just rolls on. And oil, because it continues to look as if it's turning around that massive slide from October last year. But we'll wrap things up there. Thanks for coming along. And I hope you found it useful. Enjoy the rest of your day. Have a good weekend. And hopefully you'll be around on Monday at 12:30. And to never miss out, just push that subscribe thing down there and YouTube will send you a little push whenever we go live. Okay, but we'll wrap things up there.